I'm Barbara Weber from B Capital Partners, and this is Guy Hansen. We are here at the SuperReturn conference today in Berlin, one of the biggest, or probably the biggest private equity conference in Europe, taking place every year. Guy, I would like to take the opportunity to talk to you and ask you a few questions. Let's start with what you see as the main trends in the private equity market these days.
Yeah, I think what's happening is because people have the expectation of smaller funds going forward, people are focusing on smaller deals. They're focusing on deals which need more transformation, and they're focusing on deals which need investment. So in reality, private equity is just getting back to its roots. It's going back to basics. We're probably unwinding the boom years, the sort of 2005 to 2007 years, when there were lots of public to privates, and going much more to the traditional private equity focus on deals which need transformational capital.
And in terms of size, do you want to give us an indication, what is smallish?
I would say on average, the deal sizes we're seeing today feel like they're about a third of the sizes we were seeing in the boom times.
Right. Now, in terms of industry segments, are there any particular industry segments you're seeing? Like, what I see is that, this whole infrastructure and energy business, which in a way is an asset class by itself, but, private equity funds tend to move into that because many are looking for deals and then they go into that sector. Is that what you observe as well, or what obviously you tend to be more in media stuff, so maybe it's not exactly your...
No, we're actually the largest European investor in green energy.
Okay.
So we've got about 3 billion in green energy, so we're very, very focused on that area.
Okay.
Why did we go into green energy? I think there were two reasons. One is it needed the capital, and secondly, it was an immature industry where traditionally people had looked at it very much as a project-based business. And so what we did was try to bring capital and expertise to add some professionalism to the business. And there's actually a huge variation in the performance you can get from one generation facility to another. Even in something like solar, the variation is really large. So bringing some professionalism, some money, for us has been very, very rewarding as an investment.
Right, so in terms of, back again to the industry question, would you say that the area of energy and infrastructure and energy generation or transmission, or that would be something, or what are other particular industry areas you think?
No, I think that will, but I think any area which needs capital is attractive to private equity. Now, some parts of private equity do growth capital. We tend to do what we call transformational capital. So quite often businesses which are either at a point in the cycle where they're changing. So that tends to be our focus. But private equity is about moving things and changing things, and that's effectively what's happening at the moment. Right. It's just a question of, are you growth or are you trying to transform?
Okay, so you're there. Now, maybe in that space, in terms of leverage, which is such an important part of private equity transactions, which is also a big issue these days. What do you see in terms of leverage levels and today and moving forward?
I would say the amount of equity that we are finding is needed for a deal today is about twice what it was 5 to 6 years ago. So in areas where there's really very stable cash flows, you're getting LTVs back in 2006, 2007 into the 80-85%. So you're using 15 to 20% equity. Today you're using 30 to 40%. Deals which back then you got 40% of equity, 60% debt. Today it's not quite 80, but it's probably 60% equity, 40% debt, so you've reversed the ratios. Which
might also be one of the reasons why deals have become smaller, right? Because there's some connection to that.
I think definitely, yes.
Right. Now, in this whole context of that, kind of it's close to that whole euro crisis business. Do you have a view on this euro crisis and what the impact is, how long it will take, and so forth?
Yeah, I don't see how you can, with a single currency, solve the current issue without actually changing the exchange rate. So which is obviously you can't do. therefore, for a country like Greece, unless its economy can become as efficient as the German economy, Greece is always going to end up in the same position. It's just a question of time. So at the moment we're in a sort of groundhog day, where there's going to have to be just a bailout and then another bailout and another bailout. The only way you move that is by fundamentally changing the economics in Greece, and I don't see that happening. Maybe it happens over 20, 30, 40 years, but it's not something that's going to happen over a small period of time. It's a little. If you look at East Germany and West Germany, we are many years on now, and East Germany is still a lot poorer than West Germany. Parts of East Germany have caught up, but most of East Germany is not. And that's accepted within Germany because you have a federal union. You do not have that with Greece.
Right, and it was exactly the same issue, right? We had one currency, and they were not as, didn't have the same level of productivity. But then are you saying, let's kick the Greeks out and let's unmantle the euro? Because I see your point, and me being German, and you being a Brit with your own currency, it is a kind of nice setting to discuss this.
No, I mean, I think the point is, I don't think it's necessarily good for the Greeks or good for the euro to have a country in the currency which can't financially maintain it, unless you have full union. And then if you've got full union, then people say, fine, within the UK, we have poor parts of the UK which we accept that they have to be subsidised from central government. Within Germany, you have poor parts which you subsidise. But effectively, the German people have been asked to subsidise Greece for the foreseeable future.
And all of Europe.
And a lot of Europe, yes. So it's a question of, I think people feel if you can get your living standards naturally and your productivity up within a reasonable period of time, people will accept that. The question is how long. And I think the difference between Greek productivity and German productivity is just too big a gap.
Too big a gap, yeah. Yeah, so in the way, we are as stuck with, in terms of resolution, as probably all the other politicians are, right? Because there is not an easy solution. If there was one, we would all go down that route.
There's no easy solution. Yeah. Okay. Now, maybe one just accepts that one wants to have Greece in the euro and accepts that that's going to need constant subsidy.
Right.
But then I think the politicians should be honest about that. And they should be honest to the Greek people, and they should be honest to themselves.
Right. Now, having said all that, in terms of geographically interesting regions within Europe or also outside of Europe, what do you think, therefore, could be an area for you to invest in, and maybe taking advantage of the developments or not?
I think Europe generally is, because I think the amount of capital coming into Europe is not great at the moment. The crisis has scared off a lot of world investment, a lot of global investment. There's a desperate need for capital in a lot of business areas. If I had to say which particular countries within Europe, we like Italy. We think Spain is still a little bit early. We think Greece is too risky. We like Germany, but Germany is a slightly different situation. Germany is not so much because Germany needs the capital. There is plenty of capital in Germany. Germany is more because you have an extremely productive workforce, and therefore what we found in our experience of working in Germany is that the ability to make progress in business in Germany is just very, very good. So it's almost the exact opposite.
Right. How about UK?
The UK is in between. It does need capital in certain areas, and it's probably, I would say, it's more difficult to make progress in business positively in the UK than it is in Germany. But it's probably easier than say Spain or Italy.
Going just quickly regarding UK, I would be interested to see your view, the macroeconomic view, because you have your own currency, right? And you can, devalue or whatever the currency in order to get your economy going. What is your macroeconomic view on the UK and depreciation or appreciation of currency, inflation situation, etc.? Because it makes a big difference, I suppose.
So far, the UK has devalued, and it's had inflation. people's living standards have got a lot worse off without actually people necessarily noticing it. It's been very effective, and it's beginning to have an effect on the economy positively. Now, you go through a bad period and then it comes out. So the UK economy is acting exactly as traditional economists would say it would act.
Right, and how long do you think it's going to take for you guys, and how much more depreciation is?
Well, you know, I would say, if you could never do these things, but I think that if the pound could go down another 10%, that would probably make the UK competitive enough that actually the economy would start to move forward pretty fast. But it would mean, a decrease in living standards, probably another 5–6%. So, net, the government is sort of, I think the government would probably like to do that, because it would mean the economy would start to come back in 2014 quite aggressively, which is when the next election cycle is. But whether they can actually engineer that is always difficult.
Right. In terms of capital needed, I mean there are all these, not only in the UK but in all countries. Governments are looking for capital from pension funds, insurance group, etc. And of course, every fund managers are also looking for capital. What do you see currently, in terms of ability to raise funds in your space? I mean, it has slowed down substantially. What do you think is the way forward for being able to tap the market?
I think people just have to accept it's going to be smaller amounts of fundraising. The number one question people make when they allocate at the moment is what region they want to go for. And unfortunately, Europe is really bottom of those regions.
All right. Before we get cut off, thank you so much for taking your time.